Welcome back. Now, crypto markets have started the year on the front foot, with Bitcoin back near record highs and renewed optimism around regulation and institutional adoption. To unpack what's driving crypto's performance and what investors should be watching next is Wiehann Olivier, partner and Fintech and Digital Asset Lead at Forvis Mazars SA. Wiehann, thanks so much for your time this evening. Cryptocurrencies, of course, struggled towards the end of last year, with Bitcoin shedding about 6%, but it seems to be making gains this year, pushing to a 2-month high just yesterday. Are those gains sustainable? Are we in for a better year for the likes of Bitcoin?
Yeah, I definitely think so. Bitcoin and most other cryptocurrencies, the sentiment has changed quite significantly as well. I mean, big institutions are now buying, so we're not looking at just the bleeding edge or first-time adopters or those types of investors. Things like Bitcoin and Ethereum spot ETFs in the US have brought billions from pension funds and asset managers, which makes everyday investors feel safer. And this is based on reports showing a large inflow of these ETFs. Of course, on a global basis, if you look at the regulatory front as well, in Europe, we've got regulations that kicked in, such as MiCA. In the United States, a major crypto bill is being finalized. And of course, when people see the government taking action and taking cryptocurrency more seriously, instead of fighting it, that confidence does rise as well. In South Africa, a lot of scams have been weeded out, so the Financial Sector Conduct Authority has licensed hundreds of legitimate cryptocurrency traders, which of course builds that trust. But I think fundamentally the tech is finally working for the people. So you're looking at faster, cheaper transactions on networks such as the Ethereum blockchain and layer 2 applications, including the Bitcoin Lightning Network, and this effectively makes crypto feel more like a real world use case as opposed to some science experiment. People are more confident because crypto is becoming safer, simpler, and more mainstream. And I think that applies to assets such as Bitcoin as well, which is why we also see this large adoption of a Bitcoin strategic reserve from multiple institutions on a global basis listed on public stock exchanges.
Yeah, and just on institutional adoption and investment, you spoke there of those ETFs that we did see being launched over the past year or so. Do you expect to see the same level of investment, or should we, or could we start seeing that maybe slowly taper off or slowly start normalizing?
Yeah, so I think what's interesting as well, at the end of last year, there was a lot of large ETFs selling off cryptocurrency. That's why we saw the liquidity from a sell side pushing down that price. But I mean, that has changed fundamentally within the first 2 weeks as this year, as you mentioned. But I think this year is not about hype anymore. It's about integration. Cryptocurrencies is slowly but surely becoming a part of everyday finance. So you see steadier growth and fewer fireworks. So with the ETFs and the regulated products, crypto is behaving more like a mainstream asset class as opposed to something that's fringe. It definitely won't be as crazy as we saw with 2017 and 2021, especially as more institutional investors enter the market. We also see listed companies, as I mentioned, investing in Bitcoin strategic reserve, especially with the likes of South Africa. I mean, we've got a first Bitcoin strategic reserve company listed on the Johannesburg Stock Exchange, being Africa Bitcoin Corporation. But there's real world use cases, and that's finally taking shape. We're seeing tokenized treasury bills, we're seeing tokenized funds, we're seeing stablecoin used in global payments. So there's real utility as opposed to speculation. If you even look at the likes of BlackRock, the world's largest asset manager that has a fund listed on the Ethereum blockchain. And we saw at the end of last year, the NASDAQ, a listed exchange in the United States, actually applying to the Security Exchange Commission to actually have a digital representation on a blockchain of their assets, of their shares being traded there. And of course, that will bring a phenomenal amount of advantages. You have high liquidity, you have a market that operates 24/7, you'll have that auditability as well. So all of this better technology means a smoother experience. We're going to look at cheaper, faster network, means ordinary users can send money or interact with applications without those painful fees. And I mean, that is extremely important from an African standpoint and from a South African standpoint, because within Africa, we have large migrant workforces that need to send funds back home. So effectively, that's putting cash into the hands of the consumers as well. But I think the most important thing is as well, risk will remain. Regulations isn't finished, definitely. I think on a global basis, there's a lot of uncertainty as well. Some exchanges are projected to fail. I mean, we've seen failures over the last couple of years. There will still be scams. There will still be failures. But I think all in all, crypto in 2026 is less of a gamble and more of a slow shift towards a new kind of financial system.
You touched on something quite interesting there, that crypto is starting to act more like other asset classes. And when we speak of that, we also need to look at the macro picture and the market dynamics that have been influencing other markets. You know, we are seeing geopolitical tensions, the Fed policy taking shape, and, you know, the strength in commodity markets. Are those dynamics also likely to weigh in, or rather influence price moving forward?
Yeah, definitely. I think what's interesting is now prices now move with, if I can call it, almost grown-up factors, things that we see within the traditional financial services world. Big investors, regulations, and global economics. So big investors drive the bus now. So when an ETF buys or sells billions in a week, the price will move.
Okay.
And that's very different from what we saw in the olden days, where that retail speculation drives the price. Of course, we see new regulations within the United States, a market structure bill lands, that will effectively lead to banks and retirement funds that'll have clearer rules. And of course, once those start to invest, then the market start to move as well. So we see stablecoin bringing a phenomenal amount of advantages to the traditional financial services world, especially because of the fact that you can have, instead of a T+3 settlement period, you can have T+0 seconds. So it does tend to change the framework a little bit as well. I mean, from a global perspective, interest rates, of course, for people feel better about the risk, what we saw towards the end of last year, and therefore it's starting to pick up. So cryptocurrency prices now behave more like the rest of the financial services system, driven by bigger players, bigger rules, and bigger economic shifts.
All right, let's leave it there. Wiehann, thank you so much for your time and taking us through all the action playing out in the crypto market. That was Wiehann Olivier, partner and Fintech and Digital Asset Lead at Forvis Mazars SA.